Hey guys, my name is Joey Thomas, entrepreneur and small business educator here with 17 Hats. So today we have a great topic, and it's a topic that has a lot of debate around it because there's probably 1,000 different ways that we can talk about this and 1,000 different opinions that are out there. But I'm going to share what I feel about this topic, and hopefully it's going to help you guys out. So today we're talking about how and when do I start paying myself? Okay, now a lot of people believe that they should wait until the business turns a profit. Some give it a specific time frame. Some take as little as possible because of the fear of not being able to run the business or running out of money. Now, this is where I believe that starting your business with a very strong business plan is key. When creating a business plan, you should create limits on your cost of doing business, the cost of goods, and what percentage you will pay yourself. Because when you start to work within a framework, within an idea, you can help manage those costs and start paying yourself a whole lot sooner. Now, this plan goes a long way in not just paying yourself, but also in marketing, in advertising, just in so many different aspects of your business just by starting with a business plan. Okay, so when do I start? Now. Now, here's what I mean. This question will come up. Well, I just started my business. How can I start paying myself immediately? Or I have to take care of all of these other things. Now, let me tell you guys, it's important to create a habit of paying yourself from the onset of your business. See, the quickest way to feel burned out is feeling as if you're doing a lot of work and you're not getting paid to do that work. See, the mental part of running a business is just as important as the strategies and the planning and the finances. Mentally, it's important to pay ourselves in order to maintain a sense of positivity and motivation. And motivation isn't easy to come by if you're not able to pay your bills at home. So when do you start paying yourself? You start paying yourself now. If you just started your business, we're going to work that into your business plan right now. All right, next. How do I know how much to pay myself? Now, again, another topic that we can have 1,000 different answers here, but I am hoping to give you a simple little framework just to start thinking about how to do this, right? So the real answer is it depends. Okay, so let's do a little simple math. And I'm going to keep it simple so that you can paint a picture of how to start planning all of this and it doesn't get too complicated and we don't need to break out any calculators or anything like that, right? So most of you watching this may be a service-based business or a creative service-based business. So typically for these types of businesses, we can start with the most simple of all equations, 50-50. That's right. So let's just divide your gross revenue right down the middle and go from there. So what does that mean? So plan your business from the onset so that your cost of doing business, your cost of goods and taxes, right, comes to only about half of what you make in your business. Now, it's your business. You get to set the prices, and this is difficult, guys, if you're out there competing on price and trying to be the cheapest person out there, right? So that's a whole other video. But just keep in mind that this is absolutely doable. So plan your business so your cost of doing business, that's all of your expenses, if you have an employee, all of your recurring expenses, your rent, and taxes even, comes to about 50% of your business. Now, here's where paying yourself comes in. It's in the other 50%. See, the other 50% that's not a part of all your expenses is considered your net profit. But should you put your whole net profit in your pocket? No. So that's one of the mistakes that a lot of young businesses make. They take all of their net profits and then they pocket it. And what does that leave your business? Zero. It leaves it with nothing. Your business is broke. So it's really difficult to grow from a place when there's no cash flow. So what you want to do is you can determine how much of that 50% of the total, which is your net profit, how much of it are you comfortable with to take, and how much do you want to leave in your business. Now, the portion that you decide to take, that's your owner's compensation or your salary, right? Now, as a starting point, you can decide to split that net profit, that half, into half, okay? Which is basically 25 and 25 of the whole. Or you could take more. But for this video's purposes, we're just gonna say we're gonna take those net profits and we're gonna split it in half. And when we split it in half, we're gonna use that 25% as your salary. This is just a place to start, right? It's a simple way to think about finances. And the great thing is it's scalable and it grows with your company when you choose a percentage. Now, if you'd like to set yourself max limits so that you can scale your company faster, let's say you grow 200, 300, 400%, you might not need to take 25% of the gross revenue anymore. So you can actually set those limits. And then there are other ways that you can, pay yourself, which you can talk to your accountant about. It all depends on how you're set up, right? So if 50% of your gross revenue is net profit and you take half of that, that's 25. Or let's say you take 30%. Let's say you take 40%. Whatever it is, you have to put some of those net profits back into your business so that you can reinvest it. So you can put it into marketing for the next year or special project or maybe unexpected fixes or equipment, anything. It's just good to keep some cash in your business, okay? So just from a number standpoint, just so it's so clear, right? If you make $100,000 of gross revenue, your salary would be about 25K. Again, this is just an example to tell you where to start or how you can start. But if you make 200,000, your salary could be 50K. Now you can go up or down. It all depends on how you want to scale your business and the rate that you want to grow. But the great thing is you're going to set up your business from the beginning to be able to pay yourself. And again, guys, that's so key, right? Now, technically, you don't have to limit your salary, but it's important that it's reasonable because if, let's say, for example, you're making $100,000 of gross revenue, but you pay yourself $90K and write it off, that could end up being flagged by the IRS as a suspicious expense. So depending on how you're set up, like I said before, you can speak to your accountant. There are other additional ways to pay yourself, distributions, and it all depends on how you're set up in terms of taxation. So talk to your accountant first and talk to them about paying yourself and how you can do this responsibly, right? Now, you have grown, guys. You've taken risks. You wear all the hats. You sacrifice and you put in a lot of work. So you deserve to get paid. Invest in yourself from day one and mitigate some of the stress and burnout that can happen when you don't take a salary. There's a great book called Profit First by Mike Michalowicz. I found it to be extremely beneficial in organizing finances, and he talks about paying yourself first, which is really key. So go check it out. It might help you as well. Guys, if this video helped you or it helped you start organizing your thoughts, hit that like button and please subscribe to the 17 Hats channel. Use those comments if you have any questions or you just want to chat. So again, thank you for hanging out in this little short video, and I'll have more of these videos for you guys again soon.